When you look at all the challenges out there, Brexit is finally dealt with. So we're out. We're going to be out of the EU come January 31st. What does it mean for the UK economy, and what does it mean for mortgage lending?
Well, it's actually really important that we finally have a direction for the country in terms of Brexit. And we have had a clear election result. Out of the clear election result, as you just said, we are exiting at the end of the month, but we are exiting without a hard Brexit. So we have a transition period, and that is really important for businesses and for people to adapt to. But we have, I repeat, a clear sense of direction so that the country can get together and see what is the best way to take this transition through, and especially what does the country want to be, what will be the role of the UK in the world. So we have also very exciting times ahead of us.
Are you expecting investment to come back to the UK? If you look at animal spirits, will your customers spend more? Will they want to buy more houses? What does it actually translate into the business for Lloyds?
Well, that's very interesting, because coming into the election, we had like two worlds in the UK. We had families which were continuing to spend, employment was continuing to grow, and real wages were continuing to grow. And that picture has not changed. We just had the latest results yesterday, and as you know, we had again record employment levels. 76% of people that could work are working. That means close to 33 million people, which is very good for the economy. And secondly, real wages continue to be significantly ahead of inflation, above 3% when inflation is 1.5%. So on the retail sector, where the economy, which was supporting the economy, that is continuing. On the corporate sector, where uncertainty was very high coming into the election and confidence was going down, given we have had a clear result and the hard Brexit is no longer a threat, and now we have a working majority in the House, and therefore the government can put through clear plans in order to prepare for the future, we are seeing confidence increasing, and that represents a shift on the corporate sector. Of course, there are still lots of uncertainties ahead, and especially in terms of the relationship with the EU, which is our largest trading partner. 50% of our exports go to the European Union. But that is a positive inflection on the corporate sector.
But so given what you've just explained to me, what does it mean for the organization of Lloyds? Where are you putting money? Where are you taking money out? Does it actually change where you want to be very strong and where you think it's just not worth fighting in?
No, it doesn't really change our purpose. Our purpose is to help Britain prosper. And we are, as you know, the largest retail and commercial bank in the UK, very focused on the domestic economy and on helping families, corporates, and insurance. So we have, that's what we do, households, corporates and insurance. And what this means is that we will continue to support our customers through this transition. We recently said we will lend at least £18 billion to corporates this year, and at H1 we were already lending 10, so we were ahead of target, and that is our purpose, to help people and corporates go through this transition and help Britain prosper to the extent we can do that.
So when we spoke last time on Leaders with Lacqua, we spent a big amount of that interview speaking about your technological investments.
Absolutely right.
Have they paid off enough, or do you need to spend more on them?
No, absolutely. They are paying off a lot. We have the largest digital bank in the UK. We have more than 10 million app users with the largest market share, around 20%. And all these investments that we have been in digital, where we have massively increased investment to £3 billion over the planned period, which is 40% above the previous plan, we have had very good results. That is why we haven't reduced investment in the face of the Brexit uncertainty. On the contrary, we have increased it. And for next year, so for this year, 2020, our investment plans, which we are just approving, are again to go higher than the previous plan to support Britain. So we are absolutely very happy. And I think this is a trend which will continue. People want all the time more products, better products, more personalized, cheaper. So these digital investments are not a one-off investment. In my opinion, this is a trend.
No. If you look at how will you grow the bank, actually? If you focus on growth, do you need to become bigger in Asia? Do you need to look at countries where you can grow and bring the brand there?
Well, Our purpose, as I told you, is to help Britain prosper. There is a huge segment of the market in the UK underserved. That is the financial advice in terms of investment and retirement, which banks have left many years ago. We have gone back to that segment in 2019 with a partnership with Schroders, is a great partner, where we want to provide advice at reasonable costs to consumers, which is a very fragmented market, and where people really need to start thinking low interest rate environment for their futures.
But that's domestic.
And that is a growth area for us, together with the insurance business, which has been doing very well at Lloyds, Scottish Widows, and where we have market shares of around 10%.
But so you're not expanding internationally. I mean, you could have clients that say, right, I bank with Lloyds, I want to go to China, I want to go, move my supply chain to Vietnam, and you could support them in that. Would that make sense for you, or is it something that you're just not interested in?
Our strategy is to help Britain prosper, and it is to be concentrated, as I told you, in the real economy of the UK. And we help customers to export, and we have important targets, part of our Helping Britain Prosper plan, to help new customers to export, and we do that with partnerships with very strong local banks in those countries.